You're watching Silver News Daily. Subscribe for more.
Yeah, I mean, I get it, but no, nothing has changed. And the big money that's doing this, that's trying, I think, to reintegrate gold, to reaccumulate gold. I mean, before the big Basel III deal here in July, where all the contracts need to be backed by physical metal, all of this stuff they don't want it to be too easy because when it's too easy, it gets too much attention. When it gets too much attention, there's too much competition. And when it's too much competition, they don't get to do what they want to do. And that's get in line before the rest of us. Thanks with that kind of a short position, there's something, that's very strategic about it. But that works when you don't have much of, these much of the world standing for delivery, and you do now. So that's kind of why I think you're seeing the volatility. That's why you're seeing huge deliveries. That's why you're seeing massive imports because this is getting real. And you don't want to be on the wrong side of a failure to deliver one of these large banks. I guess we'll have to see. But if it were me, I'd sell gold for that reason. Um, the things I've seen are shocking. My friend Kyle Seraphan, who's the FBI whistleblower, he's an amazing guy. He just interviewed the guy you're talking about. The one that you talk about or talking about is a year old. Well, that guy was just interviewed on Kyle's show. This Kyle's a guy that stood in front of Congress and blew the whistle on the FBI during the Biden administration. He's a fearless guy. He just had an hour-long interview with this guy. I think everyone should check it out. You'll hear he mentions company names that I won't do. I want to have him on my show, but I won't do it because it'll appear to the world that it's self-serving, and it's hard to say that it's not when it's coming from a gold company. But I'll tell you the things that I've seen. I mean, it would blow your mind, and if it were your parents or your grandparents, I think it would hit home. But everyone should go check out Kyle Seraphan's YouTube channel and watch that video.
Silver is no longer just a precious metal. It's becoming the front line of a global financial war. Right now, forces are converging that could ignite silver prices in a way the world hasn't seen in decades. Behind closed doors, BRICS nations are hoarding precious metals at breakneck speed, ripping chunks out of the global supply, while Western bullion banks scramble to maintain the illusion that everything is normal. Meanwhile, the Federal Reserve's grip on monetary policy is slipping fast, setting the stage for a collapse that could send shockwaves through every asset class. Physical silver is drying up, delivery demands are exploding, and the price suppression games that once worked are starting to crack under the pressure. The question isn't whether silver will explode past $100. It's whether it will stop before it hits $150 or even higher. So what exactly is happening behind the scenes that the mainstream media refuses to talk about? Stay tuned, because once you see the full picture, you'll realize we are standing on the edge of a historic silver supernova.
Of these things to me are peripheral noise. No, it's not. That doesn't change the structural problems that we have with the monetary system, with our indebtedness, with everything. But and we should hope for peace, certainly. But no, I don't think that changes anything at all. In fact, you could argue that when the war is over, you may see a larger, more concerted effort by the BRICS nations to focus on unity, to focus on trade. We talked about last week. 40 plus countries have applied for the BRICS, Vietnam being the last, and their new payment system, which is now open to non-member nations. They haven't slowed down behind the scenes. They're just not as open about it anymore. And the Russian finance minister is all over the place, Lavrov, talking about this. And so peace is good, but it should not have anything really material to do, in my mind, with the price of gold. Really, it shouldn't. I don't, even if it ended today, I don't see how it materially impacts the United States, the dollar, or any of the problems that are.
For decades, the silver market has been dominated not by physical bars moving hands, but by promises. Paper contracts traded back and forth with almost no actual metal behind them. In the world of futures markets, for every real ounce of silver that exists, there are dozens of claims stacked on top of it, a system built on faith rather than substance. But lately, that system has been showing deep cracks. More and more investors, especially the big players, are no longer settling for paper promises. They're demanding real physical delivery. And that simple shift is pulling back the curtain on just how little physical silver there really is. The Commex vaults, once overflowing, are now scraping the bottom. Industrial users are scrambling to lock in supply before shortages turn into full-blown crises. Even central banks and sovereign wealth funds, once content with paper, are quietly stacking physical metal. What we're seeing now is a separation, a fork in the road, where paper silver loses its credibility and physical silver takes the throne. And when that divide reaches its breaking point, the paper markets will collapse under their own weight, unleashing a price shock that almost no one is prepared for.
Depends on your situation, but look, there aren't very many opportunities where you can get an asset that has this kind of upside potential with such muted downside potential that is being accumulated by, the biggest money in the world. So yeah, I think that if it were me, I would probably sell gold. In fact, I know I would. But to me, silver is something that has been frustrating. But you can't run away from mathematics. You can't run away from that kind of logic. The old saying I keep saying, the market can and will stay irrational longer than you can stay solvent. The people that have been playing this game with the futures market are very powerful. You're talking the biggest banks in the world, probably by direction of the federal government or the military industrial complex. And again, that chart, what's his name? That Ed Steer, you saw that chart that Ed Steer showed on your site from what's that guy's name that makes the charts? Charts are us. What's his name?
While Wall Street has been busy playing games with paper silver, a much bigger and quieter force has been reshaping the market from the ground up. BRICS nations, Brazil, Russia, India, China, and South Africa have been systematically accumulating vast reserves of silver and gold, moving hard and fast to secure real wealth outside of the crumbling Western financial system. This isn't speculation. It's a coordinated shift away from the US dollar and into tangible assets that can weather the storms of inflation, currency devaluation, and political instability. China alone has been stacking metals at a rate that dwarfs anything seen before, and it's not just gold they're after. Silver is right there in their crosshairs. Russia, battered by sanctions, has turned to precious metals as a fortress against financial isolation. India's appetite for silver is hitting record highs, driven by both industrial needs and cultural demand. These countries are not making these moves by accident. They see what's coming. A world where paper assets are worth less and real assets are worth everything. And as BRICS nations continue hoarding the world's silver, the available supply for everyone else is shrinking faster than anyone realizes.
I would argue it's a generational trade. I mean, it's once in a generation trade. And, I hope people take me seriously on that. I mean, there are very few things I've ever seen where I can say to you, well, if all we do is hit 150-year averages, you'll double your money. And, that's something that you don't see very often. I don't know. I would simply say to you, it's as good of a trade as you will ever see in terms of risk versus reward, especially if it's in an IRA, because if it's in an IRA, you're not going to have any tax issues or shipping issues. That would be the way to do it. But yeah, I mean, logic would say absolutely do it. And if all that we see, goes back to 42, 45 to 1, it's a double. It's coming out of the ground at 7 to 1. So, you see it go to 30 to 1, which I think is very possible. You're tripling your gold almost.
Behind the scenes, of this unfolding crisis lies a group that has been pulling the strings for years: the Western bullion banks. These institutions have long relied on the futures markets to suppress silver prices, allowing them to profit massively while keeping the illusion of abundance alive. Through coordinated dumps of paper contracts, they could slam silver prices down whenever they got too hot, crushing investor enthusiasm and maintaining their control over the market. But today, their tactics are starting to backfire. With physical silver vanishing and delivery demand skyrocketing, every short position they hold is turning into a ticking time bomb. When investors stand for delivery instead of rolling their contracts over, it forces the banks to either cough up real silver they don't have, or scramble to buy it in a market that's drying up fast. This is why we're seeing more and more violent price swings. It's the system trying to keep itself afloat as the underlying reality becomes impossible to hide. And when the bullion banks finally lose their grip, the pent-up energy from decades of manipulation will be unleashed all at once, sending silver prices into the stratosphere.
On days like today, I think you have to put things in proper perspective. I mean, to me, the most basic, simple way of describing is that central banks aren't going to go back to buying treasuries and selling gold. I think that from here on out, you're going to see more turbulence, more volatility, sharper swings, but nothing's really changed. In fact, I just think you have to not get shaken out. The bull wants to take as few people along for the ride as possible, and you have to keep your perspective. They try and tell us that this was the Chinese dumping like 1 million ounces of gold. Let's just put that in perspective. So, first of all, when we talk about Chinese gold-backed ETFs, in the month of April, they saw more inflows than all of 2024. And that's just in the first 11 days of the month. And when we talk about China dumping gold, first of all, their markets are closed right now until May 5th, which is very peculiar. In fact, this lends itself to making you think of conspiracy and of manipulation and of suppression during Chinese trading hours when their markets are closed. That's a clever trick. To me, that's very suspicious, to say the least. And Goldman Sachs' story is very suspicious. And I think the bullion banks were able to exploit the closures in the Chinese markets to smash the price. If you look at a chart, a continuous 24-hour chart, you see it go up every time it hits Chinese trading. It goes up and gets smashed as it comes into New York. Well, with all of the Chinese markets being closed until May 5th, suspicious. Goldman talked about a 31-ton dump, but they didn't make any delineation between the Shanghai Gold Exchange and the Shanghai Futures Exchange. So I did a little digging. The Shanghai Gold Exchange delivers less than 4 tons a day, right? And so, in essence, the majority, if not all, of this dumping was done in the futures market. And so I think that that's important here. You're not seeing physical gold being sold off. You're seeing futures being sold, and it's done for effect for sure. Let's talk about what's happening here in the United States. We saw
The cracks are becoming impossible to ignore, especially when you look at the shocking contraction in physical silver supply. Across the Commex and other key exchanges, registered silver stocks, the actual metal available for delivery, are falling off a cliff. We're not talking about a slow decline. We're talking about a relentless bleed that accelerates with every passing month. Just recently, record numbers of contracts have stood for delivery, overwhelming the available inventories and forcing last-minute scrambles to find enough silver to honor obligations. And it's not just Commex. Mints around the world are reporting delays, shortages, and record back orders. Major wholesalers are struggling to meet even basic demand, and premiums on physical silver products are climbing steadily, despite the games being played with the paper price. The physical market is flashing warning signals in bright red, but the mainstream media barely whispers a word about it. They're too busy propping up the illusion that silver is plentiful and prices are stable. But the truth is, the silver needed for industrial demand, investment demand, and sovereign stockpiling simply doesn't exist in the quantities the market pretends it does. And when this physical shortage becomes undeniable to everyone, the scramble for real metal will trigger a price eruption that could leave paper silver in the dust.
For the May contract in gold, 9,306 contracts stand for delivery. That's the second highest ever for a non-active delivery month. The silver May contract, 14,813 contracts stood for delivery. That's the second highest ever, just behind March's record delivery. And we're beginning to see these short positions that are closing their positions, and you knock it down, and yeah, a good way to close it. But it seems everything's settling for physical delivery. The other side of the short, the long says, great, we'll stand for delivery, please. Who are those longs? We don't really know. But to me, this just exemplifies continued demand at the highest level. So I think people need to put things into perspective. It's been quite a run in gold. Silver hasn't begun to blow out from its technical formation. I suspect it will, and probably much more so than what we witnessed in gold. But yeah, I would just simply say that it's going to be bumpy, but nothing has changed, not even a little bit. And with the Fed meetings and all the things that are happening, I think perception, this was a perfect opportunity for, if I had to guess, the Western bullion banks to knock the hell out of the price, say it's the Chinese, even though their markets are closed, and do what they can to close out their short positions, or to settle things with metal that they're able to then physically buy on the cheap. So this doesn't bother me at all. It nothing goes straight up. It's certainly violent, but also put it in perspective. A $60 or $70 drop is 2%. So it's not a massive drop. The dollar numbers are higher than most us gold bugs really think about, because it hasn't been at these levels for very long. And when you're at 3,000 plus gold, a $300 move, well, it's still 10%, but it's a big one. But when you see $60 or $90 move, which really freaks people out, you're talking under 3%. So, yeah, you're going to see paper market volatility. That's just the bottom line. You're going to see that the higher the price goes. But I still think gold and silver will climb the wall of worry that everyone is freaking out about on social media right now.
China's role in this unfolding drama is even more calculated and far more dangerous than most realize. While much of the world was watching other headlines, China orchestrated a clever manipulation of the precious metals markets by shutting down its own exchanges during critical moments. With the Shanghai Gold Exchange and Shanghai Futures Exchange closed for an extended holiday, the Western bullion banks had free rein to smash gold and silver prices without immediate Chinese buying pressure pushing back. It was a perfect setup. Dump massive amounts of paper contracts, crash the price, blame it on Chinese selling, and scoop up physical metal at artificially low levels. But here's the thing. The Chinese weren't selling. Their markets were literally closed. The so-called million-ounce dump was almost entirely futures-based, not physical, meaning it was just more paper games with no real metal behind it. This level of strategic deception highlights just how fiercely the battle for physical silver has become. China isn't just passively stacking silver. They're using every tool at their disposal to manipulate global markets, lower prices temporarily, and quietly amass even larger reserves. The question isn't whether China knows silver's true value. It's how much longer they can keep stacking before the rest of the world wakes up and the price suppression schemes collapse under their own lies.
Their all-in sustaining cost is as low as it's ever been, with gold high and oil cheap. They're in essence, they're printing money. And Rick is one of the most impressive people I've ever met in my career. And I'm fortunate to call him a friend and worked with him very closely for 2 decades. I've never met anyone that is as well informed and also connected. In that industry, it's as much what you know as who you know. He would tell you to choose people or to choose companies that have staff that has been serially successful, is the word he uses, or the phrase he uses. Um, and no one is in a better position to put you into good companies than Rick is. For me, I would avoid the juniors, and I would avoid the exploration. These are the ones that give you delusions of grandeur. And I would stick with the majors and the streaming royalty companies. Like Newmont, like Franco-Nevada, Royal Gold, Silver Wheaton, Pan American Silver, Hecla, First Majestic. I mean, these are all great companies that, when the funds transfer even just a very small portion of their money into the mining shares, which they haven't, they've been largely ignored. And to see mining shares priced where they are, where gold and silver are where they are, it's crazy to me. So yeah, I think that you should. And to me, you envision your finances as a pyramid. The base of your pyramid, 60-70% should be things like paid for real estate, farmland, um, gold and silver. You could say cash, even though it's a losing proposition. It should be in the base of your pyramid. The middle portion, maybe 20%. 6-month duration treasuries paying 4.5%. Utility stocks paying a dividend. The home run, a top 10, 15% Bitcoin, cryptocurrencies, and mining shares. This is the Swiss philosophy. You can make more on the top 10 or 15% than the bottom 85%, if all goes well. But their theory is you lose every penny you put into the top 10 or 15. You don't even make a nickel, just break even on the middle portion, as long as the base of your pyramid is large enough to keep you from going backwards and it's low growth. And look at gold, it's outperformed everyone's expectations for quite some time now. So yeah, I think you should just don't invert your pyramid, and be judicious as to which stocks that you choose, and it would not hurt at all to come to Rick's conference, and say hello. And like you said, he does handpick all of the companies that are there for a reason. And he also does something that always amazed me. Now, I don't know if he does this anymore. Maybe he does. Um, I should have asked him. I just did an interview with him the other day for that show. He interviewed me, and he used to, if you mailed in like your mining share portfolio, he would grade it for you.
As if the physical shortages and global hoarding weren't enough, the Federal Reserve is now adding gasoline to the fire with every move it makes. Trapped between the need to fight inflation and the desperate need to stimulate a slowing economy, the Fed's credibility is crumbling before our eyes. On one hand, they talk tough about maintaining higher rates to control inflation. On the other hand, they are quietly preparing for rate cuts, balance sheet expansions, and even more quantitative easing. Treasury Secretary Yellen has openly hinted that the bond markets are flashing warning signals of recession, with deep yield curve inversions screaming trouble ahead. And history is crystal clear. When the Fed caves to pressure and floods the system with cheap money, precious metals explode higher. But this time it's not just about inflation or economic slowdown. It's about a total loss of faith in the dollar and in the entire Western monetary system. Silver, always the more volatile and underappreciated cousin to gold, stands to benefit the most from this breakdown. When trust evaporates, people don't rush into paper promises. They rush into real, tangible assets they can hold. And in the chaos that's coming, silver is poised to shine brighter than ever before.
You, I think, probably don't want to have to spend gold or silver, but like here in Florida, they just more or less, it went through both House and Senate, I guess it is here. I don't know if that's the right way of saying it. It went through both parts of the legislature. Let's put it to you that way, and it passed. And DeSantis said he'd sign it, sweeping um, legislation, maybe the broadest of all the states, where gold and silver will be legal tender in the state of Florida. You can pay your property taxes with it, and it says in there that coins like the American Eagle will be legal tender. Now, you cannot walk into the Publix grocery store and demand that they take it, but if indeed they offered a program saying we'll take your gold and silver coins for groceries, well, you can do that now. And that goes along with other states like Oklahoma and Missouri and Texas and Utah and all of these states that are actually doing legal tender laws. It's like they're moving towards something like glint, which Miles Franken is representative of in the United States, the only one in the United States, and that is a digital gold program. All of the states seem to be moving in that direction, some sort of a digital back gold payment system like glint. But they all say you can use gold and silver coins. Now, I know I was 10 years old in 1980, but my dad tells me the story all the time that the gas stations, there were ads in the local Star Tribune newspaper back then during the oil embargo and the high inflation and $50 silver was on its way up, that they would take a silver dime for a gallon of gas. So, we don't want to get to a barter position, but it now appears that you have enough push towards, letting these states' constituents have options other than the Federal Reserve notes, which have been destroyed in value. They're losing value every single day. And it gives these people in these states, myself included now in Florida, the ability to, I guess, to a limited capacity right now. Maybe it expands much greater, but there's a place that wants to take gold and silver and you have it. It's legal now here in the state of Florida, or as soon as DeSantis signs it into law, but it's passed both Republican and I don't even know how you say it at the state level, but both sides of the I guess it would be the same thing as the House and the Senate, but on a legislature basis here in the state.
While the Federal Reserve stumbles, the BRICS nations are quietly building an entirely new financial architecture that could redefine global trade, and silver is set to be one of its biggest beneficiaries. The new BRICS payment system, designed to bypass the US dollar entirely, is not just a political statement. It's a full-scale assault on the dollar's role as the world's reserve currency. More than 40 countries, from Vietnam to Saudi Arabia, are lining up to join or integrate with this emerging system, eager to escape the weaponization of the dollar through sanctions and monetary manipulation. And what backs this new system? Hard assets, gold, silver, and commodities. By pivoting to real money, rather than debt-based fiat currencies, BRICS is setting the stage for a seismic shift in global wealth flows. Suddenly, silver isn't just a hedge against inflation. It becomes a foundational piece of the new monetary order. As trust in the dollar erodes and global trade begins to settle in gold and silver-backed systems, demand for these metals will skyrocket in ways the Western world is barely beginning to comprehend. The world's financial gravity is shifting, and silver is about to be pulled into an orbit of explosive demand and unstoppable momentum.
And Richard Russell, I'll make it easy because the Fibonacci numbers I don't know off the top of my head, but yes, that is true. Richard Russell always used to say at least a 50% retracement. When you see things move up that high, a 50% retracement is normal. And it is normal and healthy, with somewhat of a gold squeeze. It moved a little too fast. It was exciting. And, we were all thrilled by it and expected it to go straight up forever, but it won't be that easy, not even a little bit. But take a step back again, and you got Treasury Secretary Bessent saying that the bond markets are signaling it's time for the Fed to cut rates. Well, they want to go back to, more easy money and perhaps even quantitative easing. Again, this is very gold friendly. Powell didn't say flat out that he's going to abandon his dual mandate, but he hinted at it. In other words, they're caught, and they know it. We're caught between the ability to fight inflation and to keep rates low enough to stimulate the economy. You're seeing mass layoffs. You're seeing a slowdown in the economy. Um, and so I think, what do you do? I think Trump wants lower rates. He wants a lower dollar, as we've seen. And now you have the Treasury talking about coming in and buying their debt as well, finding ways to buy older maturity debt. Again, this is all monetization. Right now, we saw the negative print on the GDP, right? And so the 2-year Treasury yield is 3.56 right now, but the federal funds overnight rate is 4.33. This is more of what we saw before. This is classic yield curve inversion. This screams of a recession coming. And so, with inflation fears elevated already, May 7th is the next Fed meeting. A lot of this is done by design for optics with the Fed meetings coming up, and everything is okay, don't worry. But they want to lower rates. They want to lower rates not only on the front end of the curve, but even the 10-year, and stimulate. You're going to see a reignition of inflation. This is all very gold friendly. So, I think there are some big players that are caught in the futures market that would love nothing more than to extricate themselves from these positions. So seeing the metals market get knocked down like that and see all of these contracts closing out is not surprising to me. What is surprising is people's reaction, thinking that, well, maybe we should go from risk off to risk on. Absolutely not. I think that this is why emotions very often get the best of us, and it's natural. I get it. It is emotional, but you got to take a step back and ask yourself, what if anything has changed? We're not saving any money on our indebtedness. In fact, we're going deeper and deeper into debt, even with Doge. So the indebtedness is still a problem. The fragility of the economy is still a problem. The geopolitical issues are still a problem. Nothing's changed. But what has changed is there's greater volatility in the market.
The quiet buildup has reached a boiling point, and now the market is teetering on the edge of a silver short squeeze unlike anything we've ever seen. For years, bullion banks and institutional traders have leaned heavily on short positions, flooding the market with paper silver to keep prices artificially low. But with physical metal disappearing and investors refusing to settle for cash instead of delivery, the walls are closing in fast. Every contract standing for delivery forces the shorts to either come up with real silver they don't have or panic buy in the open market at whatever price they can find. Already, we've seen staggering delivery numbers in what used to be considered non-delivery months. A clear sign that the players demanding metal aren't interested in rolling over. They want the real thing. If even a small fraction of these delivery demands continue or escalate, it will trigger a buying frenzy that overwhelms what little registered silver is left. And once that avalanche begins, it won't just be a price spike. It will be a full-blown collapse of confidence in the paper silver system, unleashing a tidal wave of demand that could send prices to dizzying new heights almost overnight.
In some respects, it already is. It just hasn't, the monetary aspect of gold is what has been agreed upon by the central banks. But from a strategic standpoint, you could argue silver is just as valuable, and maybe that's why you see these 8 Western banks that have gone to such great lengths to suppress the paper price. But then again, you're seeing massive deliveries as well on Commex, and when you see the open interest just fall by 10% yesterday, that signals that typically, to me, that signals that these contracts are getting closed out and are preparing to stand for delivery. So when there is a short, the long on the other side has the ability to stand for delivery. And when you see on the first day like that, it just massive drop in open interest, that to me are contracts that will stand for delivery. And again, we saw, a huge delivery. What did I say on that number? Huge delivery that we just saw. What was the number here? 14,813 contracts. It's the second highest ever. And if we multiply that times 5,000, well, that's 7 million 400 and no, is that 74 million? That's 74 million ounces of silver. 74 million, one, two, three, one, two, yeah, 74 million, 65,000 ounces of silver stood for delivery just like that. And I think you're going to start to see silver leave the Commex exchanges as well. And that's when you'll realize that this is getting really serious. But, you know, this is a trend that hasn't stopped. We've seen more imports of gold into this country and to a lesser degree silver than at any time since the end of World War II, when everyone sent us their gold because of the Bretton Woods deal. So it's not just gold, it's also silver. And I think the people at the highest levels understand silver. There's a race to secure it, and I think they understand that it is strategic. It's not tier one, so it doesn't have the same implications that gold does for the Basel III regulations. But when you see Russia and India and China and all of these countries on a mad dash for it, I think that people in the United States who are making the policy understand that as well, and that's why you're seeing so much brought into the country from London and from Switzerland.
All the pieces are now locked into place, and the case for $150 silver is no longer some wild fantasy. It's a logical outcome of the forces grinding through the financial system right now. Physical shortages are mounting, BRICS nations are draining global inventories, Western banks are caught in a death spiral of their own making, and the Federal Reserve is losing its last shreds of credibility. The fragile paper-silver system is being exposed as a house of cards, built on leverage, deception, and blind faith that the physical metal would always be there when needed. But it's not. And as more investors, industries, and nations realize the brutal reality of true supply and true demand, silver's price won't just rise, it will detonate. When it happens, the moves will be violent, sudden, and impossible to catch once underway. Those who are prepared beforehand will be positioned to ride one of the greatest wealth transfers in modern history. And those who aren't, they'll be left watching from the sidelines as silver leaves its manipulated past behind and reclaims its rightful place as one of the world's most critical assets.
I gave him credit for it. I talked about it. His video was very cool. I think it's a little aggressive to say that by the end of summer, but he talked about backing M1 with gold, and the numbers he used was 2,365,000,000,000 divided by 261 million ounces. You get $9,044. That is what gold would be today if we backed M1, which is the Federal Reserve notes in circulation. That's the way it was prior to 33. When the dollar was backed by gold, it was M1 notes in circulation, and M2 is credit. It's 92% credit, according to Mike, and it's all the numbers that you see in your bank account. That's just credit. They don't have it at the bank. If you had $5 million in your bank account and went there and demanded it, well, you'd be lucky to get 2% of that, which is interesting. By the way, just noticed a story today. Spain has introduced strict new rules on cash withdrawals. Withdrawals over 3,000 euro require advance notification to the tax agency. Over 100,000, you need 72 hours notice. So, but, getting cash is harder and harder. But anyways, that was a little side digression. But when you talk about Mike's point, he would be talking about fully backing the currency in circulation with gold and making it redeemable. It's aggressive. He said, well, 9,044, they would want some wiggle room, so they'll put it at 10. It's a take that is well thought out and articulate, and I think it's aggressive. I don't think it will happen, but I liked it anyway enough to talk about it last week and give him credit. Thought it was a cool presentation he did.
Silver's moment isn't coming. It's here. The shortages are real. The BRICS nations are making their move, and the cracks in the Western monetary system are growing larger by the day. The price suppression schemes that held silver back for decades are now running on borrowed time, and when the dam finally breaks, silver could catapult past $100, $150, or even higher before the world fully grasps what's happening. This isn't a drill. This is the financial reset playing out in real time, and silver is set to be at the very center of it. If you've been waiting for the signal to get serious about precious metals, consider this it. Make sure to stay ahead of the curve by subscribing to the channel for the latest updates and critical analysis as this silver story continues to unfold. And remember, this is not financial advice. Always consult a professional before making any financial decisions.
And it looks, I was just reading it today. Now we have adopted that to a degree already, but it's even gotten a little further. Basically, it looks like just about anything that you would sell will not trigger dealer reporting unless it can settle a Commex contract. And it was either 3 kilo bars or a 100-ounce gold bar. We used to have to, if we implement, we haven't done it on the 1-ounce gold bars yet, and I believe we should. We did stop reporting. Well, let me back up. We have always been under the assumption, and it's been that way forever, that in gold, if you sell more than 24 Krugerrands or Maple Leafs or more than 24 ounces worth of Mexican 50 pesos, because they're 1.2 ounce in one transaction, we're supposed to do a 1099. Or gold bars of any size greater than a kilo. That would trigger reporting. Now, the new Commex rules, basically, the way that I read it, said that if it can't settle a contract, it's not reportable. That would mean no longer report Krugerrands, no longer report Maple Leafs, no longer report 50 pesos, and no longer report 1-ounce gold bars if you're selling them back in excess of those ounce limits. The only thing that would trigger it on gold would be 3 kilo bars in one transaction or one 100-ounce gold bar. On silver, we always used to have to do bars or rounds at 1,000 ounces or more, or pre-65 constitutional silver at 1,000 face. When you get to the $1,000 face value mark, you have to report it in one transaction. Now, again, we've already taken out, because of this rule, we don't require it on junk silver anymore, nor do we require it on silver rounds anymore. You can settle a contract with 10-ounce, 100-ounce, kilo, or 1,000-ounce, technically. So
Silver bars.
yes.
Mm-hmm.
So in essence, what it really does is it frees up the gold reporting on just about every level. Now, that doesn't mean you don't have to do it, right? You know, just because we're not going to do a 1099 on your behalf doesn't mean you're not required to do it. It just means that it's the honor system. So be that as it may, you should know what the law is, and we'll show you where the line is. We'll show you how to look over it. If you step over it, that's your choice. We're not going to do the reporting, and most everything you're selling, it looks like, moving forward.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active.
Sound bad, but I mean it sincerely. Like, if I was sitting at a bar with everyone here having a drink and I were being completely candid, I would say there are more full of crap companies in this industry than there are good ones. And a lot of these companies spew half-truths, myth-truths, but a half-truth is as bad as a lie in many respects when you're talking about, you know, an ounce of gold being over $3,000. Like, there are companies that will try and tell you that a British sovereign is collectible and not reportable. Well, not reportable isn't the right word. They'll tell you that it's collectible because it's pre-33 and safe from confiscation is what I'm trying to say. But the law says pre-33 US mandated. So if, or US made. So if you're buying numismatic coins, there are companies that will try and sell you British sovereigns and Swiss 20 francs, which are just a few bucks over melt value at huge premiums. And they say it's a collectible. That's a half truth. Yeah, pre-33, but no, because it's not US made. It is not safe from confiscation in theory, or something like that. Yeah, I was told American Eagles, you don't have to report. No, the dealer doesn't need to report. You do. There are lots of half truths like that. Or used to talk about QSIP numbers or these modern minted numismatic. All this stuff is just a bunch of nonsense. So I'm glad you brought that up. And that's why you deal with the 6 or 7 or 8 or 10 companies that have great reputation. And they're easy to find. Just stay away from the ones that are IRA centric. That's the biggest thing of all. They're the ones that are causing the most trouble in this industry. The ones that you go to their website and they're all IRA. Those are the ones that are really, as far as I'm concerned, harming the credibility of this industry.